Good morning, everybody. This is Bob Iacchino along with Mike Arnold, co-founders of Pat Trading Partners. It is May 16th. This is an AM Pat chat covering the forex markets. Needs to be said, not market moving, but wouldn't want you guys to think that we don't notice any news at all. A story in the Washington Post stating that President Donald Trump revealed sensitive classified information to Russia's top diplomats during a meeting in the Oval Office last week. The story was characterized as false by General H.R. McMaster's White House National Security Advisor. Markets didn't care at all. UK inflation rose to 2.7% year over year. That's the highest reading since September 2013. Oil trading up again, up above $49.13 at this point. Again, that's off of the OPEC agreement or the Saudi agreement with Russia to extend the cuts through the end of the first quarter 2018, which was longer than most people thought. Overnight markets are mixed. Last night, we got the Royal Bank of Australia's meeting minutes, their policy meeting minutes, added nothing to the conversation, basically. They stuck to the script. They basically said that rates and asset purchases are judged consistent with sustainable growth and with the goal of hitting the RBA's inflation targets. They said developments in both labor and housing markets warranted careful monitoring. So nothing new out of that. In terms of economic news for today, we got Japan's tertiary index month over month last night. That was down 0.2% versus an expectation of up 0.1%. Euro gross domestic product. These were first quarter preliminaries, and again, right in line with expectations, 0.2 on the headline. And the year over year, 0.8. Again, those were both as expected. I mentioned the inflation year over year in the UK. German ZEW came out at 20.6 versus an expectation of 22. That was the economic sentiment. The current situation came out a little better, 83.9 versus an expectation of 82. There was much more concern with the economic sentiment. That came out a little bit lower. But the Eurozone economic sentiment came out strong, 35.1. You can see a continued rally in the euro here. The US dollar is at a 6-month low, lowest level since the election. That's what the ICE, the Intercontinental Exchange's dollar index. U.S. building permits already came out, down 2.6 month over month on the housing starts, and the month over month building permits down 2.5. That was versus an expectation of 3.7 and 0.2. So extremely weak. It's a pretty big miss. And U.S. industrial production coming out in a little bit. Let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Okay, thank you very much, Bob. So we're watching for a close above this trend line, which we got, and then we're watching for it to target the end of the clear path right around this 110.19 to 20 level, which it clearly went through today. Our next higher levels in the euro US dollar, 110.78 right up here to 110.93, then above that 111.35. On a pullback, watch for this 110.20 area, which will be key. Then you could watch for some minor support right back at about 110.08, and then 109.94, and then on a bigger pullback, 109.65, where we have again level in a rising 8 that's going to come into that area. Over to the pound US dollar, still holding in this congestion channel right above the flattening out rotation zone. So on a downward move, watch for 128.61, followed by support at the defining point of the trend line, 128.44, then 128.33 are going to be the key levels. If we do get a close below this defining point or a sustained intraday move below that, the next target will be the end of the clear path, 127.84. On a move higher, minor resistance around 129.11. Then we have some more substantial resistance right around this 129.50 area. Then on a move above that, we can target the old defining point and the recent highs right around 129.88 to 129.89. That's going to be the key areas to the upside. US dollar, Japanese yen, rotation zone still propping it up. So on a continued rally, watch for resistance around 113.85, followed by 114.01, followed by about 114.20, and then a retest of recent highs 114.37 on a pullback. Very key support right around this 113.22, right around here. 113.16 to 22 is going to be key. If that is broken, watch for 112.81 to 112.73 as next level, and then we could possibly fall to about this 112.54 area. Over to the US dollar, Swiss franc, big multi-day move down. If we continue lower, minor resistance right now is 99.02. Then next levels down 98.88 to 98.87 in there, and then finally 98.77. If we do get below the trend line, you can watch for a move down to 98.58 area, where we have a little cluster down here. Rally back up, resistance 99.18 to 99.23 is the first resistance zone. Then if we get back through that, 99.48 to 50 area, and then we could watch for a retest of the highs today that have already been put at about 99.60. If we break through all that, then we'd watch for the first cross rotation zone area right around this 99.76. Over to the Aussie US dollar, finding some resistance at the upper end of the rotation zone and our declining trend line. So on a move back higher, 74.34 first level to about 74.38. So that 34 to 38 is going to be key. If that is broken, watch for 74.54 and then the return to the breakdown zone, which is about 74.67. On a move lower, we're going to be watching for some minor support right around this 73.94 to 74 area. Then if that's broken, 73.81, and then the next level support's not down until about this 73.58 area. US dollar, Canadian dollar. Yesterday closed pretty much on the bottom of the rising rotation zone below our trendline defining point. This is also a very, very sloppy double top. So if this continues lower and fills out this sloppy double top and this trendline trade, they're virtually the same targets all the way down about this 134.81 level for a full target of it. In the shorter term, we're going to be watching for minor support right around this 136.01. Then we have some more support right around this 135.75 to 80 level. Then the next level below that is the 135.40, followed by the 135.25. On a rally back up, we do have resistance now at the defining point, the 136.47 area, followed by right around the 136.66 area, then the 136.90 area. And if all that's broken, the prior upper end of this congestion, this resistance, is right around the 137.20 area. Finally, over to the US dollar, Mexican peso. Got to close below this trend line. We're watching for a move to the end of the clear path, 1872.51, which we did achieve. So that's now providing some minor resistance. On a rally back up, 1876.98 first level. Next level would be 1881.80, followed by about 1885.50. On a move lower, we have some support right around this 1862.69 area, followed by 1861.13, and then nothing until we get down to about this 1855.97. That's all we have for you today. Back to you, Bob.
Thank you, Michael. Don't forget to hit subscribe and or like if you like what we're doing, and we will talk to you in the next Path Chat. Cheers, everyone.